I'm being honored to introduce the speaker for the day. So, CA and advocate. So, Raghuraman is a commerce graduate and a qualified chartered accountant, company secretary, cost accountant, and an advocate. So, he's a rank holder in all his academics. In specific, he was the first rank holder in for the BCom. So, he's a practicing advocate and chartered accountant for the past 30 years. His area of specialization are GST, excise, customs service tax, foreign trade policy, and FEMA. He is a visiting faculty of the IAM Bangalore and also the CA Institute. He has addressed a large number of seminars and published several papers in the national magazines on GST, excise, customs, service tax, and FEMA. He has been a member of the Indirect Tax Committee of ICA New Delhi during the year 2014-15. He has authored books like, say, Landmark on International VAT Decisions and its relevance to Indian GST, published by International Publishing House, Walters and Cloos. So, on GST and Indirect Taxes Principle Demystified, published by the International Publishing House, CCH. So, with this brief background, I hand over the session to the speaker of the day, Raghuraman sir.
Thank you, sir.
Thank you.
Thank you. I thank the Trichy branch for inviting me to share a few thoughts on input tax credit. If you have probably not known, I hail from Tanjavur. That is my... I was born and brought up in Bangalore, but I'm saying my father and my mother, all of them, we hail from Tanjavur, more specifically Mannargudi, which you will know very well why it is famous. But those days it was not famous for all those things. Nevertheless, we will not get into that side of the discussion at all. Our focus will be purely on GST, and we will try to find out, we will try to inquire and see what are the objectives of introducing this GST and how far those objectives are being fulfilled in this last 4 years. Because in these 4 years which we have seen, the envisaged system that was to work and the GST law itself was designed on a particular, the law itself says matching of credit, this, that, everything will take place automatically. All these provisions which are there in the law, including GSTR 3, etc. It was designed for an automated system. And I remember on 1st of July 2017, I had on the day GST was introduced, I was addressing. And I had mentioned that the government should and must give a manual option completely for the filing of returns and filing of appeals, etc. And it should not be automated soon. They should give you a option of filing manually, because you are running a India-wide system and it is very difficult to do matching across the country. You can do within a state. Across the country, matching is very tough. But they did not listen to this, line of thinking. And after 4 years also, we are not able to match credits, match debits, and all sorts of things are happening. So I believe that the government of the day should learn this, take it as a lesson. Nothing wrong in rectifying the systems. If you look at it, the GSTR 3 was told as a return and 3B was told as a statement. After that, several years, on 1st of January 2021, they amended the rule itself to say GSTR 3B will be the return. So, GSTR 3B is not at all a return. So, these are all problems which we are handling in the several high courts that where petitions are pending. But fact of the matter is this. Now, after this GSTR fiasco for 4 years, now we are having one more on our hands, this income tax. I don't know. I know very well that you would have seen that we are not able to do anything on the new portal. Nothing is happening. So it's becoming a little difficult to handle these issues. And the chairman also said that 9C certification has been withdrawn. And there's a lot of heartburn among chartered accountants. Well, let me clarify to you this position. The moment 9C is withdrawn, what is the effect of it? Assessees will have to do self-certification of their reconciliations. As is the practice throughout the country, the department will not understand what reconciliation is being filed. Immediately, as it is, you're seeing countrywide, they're issuing notices based on the 26 AS. I do not know in Trichy if this has started, but it has started everywhere else. 26 AS and GST not matching. Left and right notices are being issued. I have also got a stay on such notices in Karnataka High Court. It has become a very difficult exercise. Now, what will happen is when the reconciliations are not made as per how the chartered accountant would have done, the net effect of all this will be that new notices will start coming from the department, and the assessee will give it to the chartered accountant to reply to these notices. And therefore, at least in cities, I am not aware in how it works in Trichy, but at least in cities, the income of the chartered accountants is going to go up by 2 times. The 9C reconciliation which they were filing came with a heavy burden because no client would reimburse anything extra. Any dispute comes out of 9C, you will have to face it. The CA will have to reply to it, and in fact, you will be blamed for preparing the 9C. Now, in my opinion, it is a very good move that this 9C has been removed from the burden of the CAs. And you will see in a couple of years' time, your income will start becoming double on account of this very GST removal of 9C, because so many notices are going to follow. So you don't need to worry about the removal of 9C in my humble view. Short-term loss, long-term gain. To put it in income tax language, short-term loss, long-term gain. Now we come to input tax credit. Now, what is the objective of introducing this GST? The very objective of introducing GST was 3. Harmonizing trade throughout the country. 1. How do you do that? By harmonizing the tax rates throughout the country. 2. 3. Removing the cascading effect of taxes. This was the 3rd objective. Therefore, if you see the constitutional amendment bill, which was 116th amendment bill, which was introduced, this was one of the objectives, removing cascading effect of taxes. The cascading effect of taxes removal means what? You will have a seamless input tax credit. Now, do you have a seamless input tax credit? Is the next question you will ask me. I'm afraid to say the answer is no. It is not seamless. In fact, if you look at the earlier service tax regime and the GST now, in service tax, if I paid for a service in Tamil Nadu, I could take credit in Karnataka. It's all India legislation. But today, if I come and stay in a hotel in Trichy, that bill is of no use to me in Bangalore. I can't take the credit. So to that extent, the cascading effect of tax has actually become more in GST, unfortunately. How are they going to rectify in this situation where the states are fighting with each other, center is fighting with states? It is going to be very tough for you to remove the cascading effect fully. But to the extent possible, the government should try its best to do so. At least the central levies should be capable of being set off. I do not know why the center is not thinking along these lines. After all, as far as the union government is concerned, they are collecting taxes across the country. What stops them from giving a tax paid in Tamil Nadu? Why it cannot be given credit in Karnataka? After all, it's the union government's share. So this is one of the things that the finance ministers, the finance ministers of the states are not bothered in the GST council because it doesn't affect them at all. So therefore, this kind of a pressure should be brought on to the union government to avoid cascading effects, at least across the country, as far as the union levies are concerned. This is one of the first major issues that have to be taken up. It's not that the government is not aware, they're aware, but they're doing nothing about it. Especially because today our pandemic, as the chairman said, pandemic is causing problem. No, pandemic is causing problem for us also. It is a problem for all people. Anyway, your excise duty and customs duty, which you're collecting, and sales tax, which you're collecting on petrol and diesel, is taking care of the pandemic to a large extent. Do you know that they will not introduce GST on petrol and diesel till the revenues go up substantially? More than 1 lakh of crore. I'm not joking. 1 lakh crore. More than that is being collected by way of taxes on GST on petrol and diesel. Please keep this in mind. So if you want to get that into our GST system, our revenue should go up by another 20,000 crores per month, which is difficult to achieve. So you are going to be stuck with this levy for some time. Now, first things first. Input tax credit is a credit that is available to you if you are using inputs, that is goods or services, in the course of furtherance of business. So you must understand one thing. GST is a tax on business. It is not a tax on your personal services. Please keep this in mind, especially in areas like Trichy, where you will be asked to give a consolidated retainer for everything under the sun. You have to be doing is GST, you have to do is income tax, you have to do is everything. Short of household work, where ella paniyan for a retainer that you get. So you should understand this, that GST is a tax on business. It is not a tax on your personal activities. Please keep this in mind. Just because there is an income coming in your income tax act or coming in your profit and loss account, that does not mean it is because of GST. GST is leviable. For example, if you are getting interest on fixed deposits, can you say that it is in the course of furtherance of business? A retired person is earning some money, let us say FD. Can you say it is liable to GST? The answer is no. Second, let us say that as investments, you keep some property and you get the income. Can you say it's in the course of furtherance of business? I'm sorry to say, no, you cannot. It is an investment. It is not in the course of your business. I can understand if there is a company which is set up, like Chennai Investments case, Supreme Court. If an investment, you set up a company whose main objective is to let out the properties and earn income. Yes, then it is the course of furtherance of business. Retired person or a chartered accountant who puts his surplus funds and earns rental from properties, please understand that is not supply in the course of furtherance of business. So please keep this in mind before you advise all your clients. 3. There are several rounds of discussions going on whether partners are rendering service to partnership firm. I have never heard of this. Please keep in mind, partners are sharing the profits in a partnership firm. Chidambaram Pillai's decision, Supreme Court. They're sharing the profits in the firm. They don't render any service to the partnership firm. Partnership firm is only a compendium of individuals. So keep this in mind. So you earn a remuneration, you earn interest on capital. All this is a part of the profit sharing. There is no service element or supply of services in all these activities. These fundamentals, if you keep in mind, you can also note that input tax credit will be available only as credit to those activities which are in the course of furtherance of business. That is why section 16 says you can take credit on goods or services in the course of furtherance of business. So please keep this in mind. It is a business tax. Whatever you get for your business, you can take credit. For your personal issues, there is no question of paying GST or taking any credit. So please keep this in mind. 16(2) is a provision that has been brought in to give conditions for taking credit. Now, this is one of the most vexed provisions in the earlier regime, and it is a vexed provision even now. There are a lot of litigation going on. What is it? What are the conditions? If I have to take credit, I must be in possession of tax invoice. Okay, fine, no problem. This Finance Act 2021, they introduced details of the invoice or debit note should be uploaded by the supplier. Let us assume that I supply some services or goods to Mr. Arun. Now, in order that Mr. Arun should take credit, I should upload the invoices. Then only he can take credit. Now, what happens if Mr. Arun pays me the money and I don't upload the invoices? What this happens to him? He has to forego the credit because 16(2) AA says I have to upload. Now, if I don't upload, what can he do? That is the question which arises. And that is the question which many people are facing across the country. I either forget to upload, or let us say after he pays me, we have a fight. And then I tell, oh, I will take revenge. I will not upload. Or my employee is not there, so he has forgotten to upload. What happens in such cases is the question. Department will immediately issue notice saying, since it's not uploaded, you are not eligible for credit. If you do not pay this tax immediately or reverse, we are going to block the credit ledger under 86A. This is the problem that several assessees are facing across the country. There are two ways of handling it. One way is, if it's not uploaded, don't take the credit. This is what every covered in the country will do. I would advise you, take the credit. If it is substantial amounts, please take the credit, because credit is a vested right. Credit is a vested right. If the tax is paid already by by me, or Mr. Mahesh has already given me the entire amount, including the tax amount, as far as he is concerned, he has done everything. He can't be expected to do the impossible. That is what in law there is a saying, res non cogit impossibilia. That means the law does not contemplate impossible events to happen. So if I do not pay, still Mr. Mahesh can take credit. If the department questions you, please write back to them saying that as far as I'm concerned, I've already taken. Same, one more condition, if you see 16(2)(c, it says, what does it say? I should have paid the tax. Apart from uploading the invoices, I should also pay the tax. What happens if I don't pay the tax? I close down my business and run away. What happens to Mr. Arun Mahesh's credit? Similar issue came up before the Delhi High Court in on-quest merchandise case, 10th volume of GST. Delhi High Court said, unless Mr. Raghuraman and Mr. Mahesh are under any collusion, the question of denying credit to Mr. Mahesh because Mr. Raghuraman has not paid taxes does not arise. I repeat, does not arise. Such a law is arbitrary. Because you cannot expect Mr. Arun Mahesh to enforce that Raghuraman will pay the tax. It is impossible for him to do so. So there is already decisions in the earlier VAT regimes. In fact, the Madras High Court has also held like that in 2-3 decisions. They have held you cannot force. How can you tell Mr. Mahesh to reverse the credit because Raghuraman is not paid? What can he do, poor fellow? He has given the money. I have not paid. So in my view, 16(2)AA, 16(2)C, which mandates payments, which mandates uploading of invoice by the supplier as a precondition for taking credit, is unconstitutional, invalid, and therefore you should ready yourself for a fight, because Madras High Court is already in 2-3 decisions have said, followed the, even before Onquest decision, Madras High Court had said so. So these are 2 things. You can either accept the department and not take the credit, or fight. If the credit is substantial, I would suggest that you must not accept what the department says. Please understand this one thing, as you will very well know. If you lose input tax credit, you have lost a profit, because input tax credit increases your profit straight away. It goes straight away to your bottom line. If you do not take the credit, you lose it. So please check and see in GST regime, except certain block credits, all other credits are available. By default, all credits are available, except those which are blocked under section 17(5). So you must look at your business of the whatever business the person is running and see his bills, because many a time I'm seeing that the businesses lose because they are not taking input tax credit in the first instance, and this is happening rampantly in the smaller cities, where the assessee himself does not know, or the chartered accountant is not abreast with the law, or both. So many a time I'm finding that the invoices are not being taken credit at all. Now, when you look at the what you can take credit on, what are the things you can take credit on? One has to see goods, services. Goods are classified into 2, inputs and capital goods. Inputs are those which are used in your business and you don't capitalize. Capital goods are all those other goods which you capitalize. So who decides what is to be capitalized? It is a business and the chartered accountant who will decide what is to be capitalized. Please understand this. The GST law is different. It is a chartered accountant who will define what is to be capitalized. And the department cannot question when he says that something is to be capitalized. If it is capitalized in the books of accounts, it becomes capital goods credit. If it is not capitalized in the books of accounts, then it becomes inputs. For example, for a chartered accountant, a computer is a capital goods because he uses it for several purposes. But for an institution which, let us say, manufactures high-end computerized equipment, computer will merely be an input, because they will be buying computers and selling it along with their finished goods. So what is input, what is capital goods will vary according to the business that is there. So after having analyzed your client's balance sheet and bills, you should come to a conclusion whether it is input or capital goods and take the credit accordingly. Make sure that the invoices which are there are received. Condition number, we have dealt with 3 conditions. 4th condition is that the goods should be received. Perfectly all right. Only after receipt of goods you are taking the credit. What about services? Because the law says services should be received. It never happens sometimes. AMC service, for example, will be billed in the April for the whole year. In these cases, it is reasonable for us when the tax is paid, you can take the credit. There is no problem. If you got the invoice, take the credit. The services may be rendered in installments, but if the invoice is given complete for the complete amount and tax is paid by the supplier, matter ends. You can take the credit without any problem. This is my humble view. Furnishing of returns is a must. If you have not furnished your return, you cannot take the credit. Now, in order to furnish the return, you have to pay the tax. So it's all interwoven. Especially what is happening is that if you have tax arrears in the previous months, this month returns, you will not be allowed to file. In such cases, credit also goes out. So you have to be very careful in this GST system, because I'm finding a lot of persons, if they have not cleared the arrears of tax in the previous months, are finding it difficult to file the returns in the subsequent months, which means if it continues like this, your e-way facility will be lost, everything goes. So this is another issue that I'm finding, which is coming across several assessees. There is one more issue which is there in 16(4). Now, 16(4) is an important provision that we should deal with. What does it say? It says that for the year, you should take the credit before September, or annual return, whichever is earlier, which means before September. That means to say, between April 2020 to March 2021, whatever credit you have taken or you could have taken should be done by this September 2021. If it goes beyond that, you lose the credit. That is what the law says. Now, what do you mean by availment of credit? This is very important for us, especially in areas like teaching. What do you mean by availment of credit? Is it credit in the books or credit in the returns? As per the department, credit should be in the returns, but that is not so. All that it says, the law says, is you should have credited the input tax in your books before September. This is my humble view. So therefore, if your last year's between April to March, any credits are missed out, please review the ledgers today, the invoices today. Make sure your assessees are taking the credit before September of 2021, because after that you will land up in a dispute. We have writ petitions pending across the country on this issue. There are many people who have not taken credits during 17, 18, 18, 19, 19, 20, 2021. 2021, you have time, even now you can take the credit. 19, 20, you have not taken credit. What is the solution? Can you take the credit now? The question is, can you say credit can be taken now for bills which you have received in the year 2019, 2020? Department will say no. You cannot take. But I will say, attempt it. Why? Till 1/1/2021. Please note these dates. Till 1/1/2021. Rule 61 talked of 3 or 3B. talked of Rule 3, GSTR 3 or GSTR 3B. GSTR 3 remained the original return under Section 39. So Gujarat High Court in AAP company's case held that GSTR 3B is not at all a return. GSTR 3 only is a return. Once they held like this, immediately department woke up and the council, GST council woke up. And the GST law itself is only waking up law. We'll go to the High Court, we'll get something struck down, then they will get up, wake up, and then amend the law. So that's what they did. They amended the law. But when they amended the law, they amended Rule 61(5). But forgot to take out GSTR 3 as a return. It still continued to be a return. So GSTR 3 continued to be returned. GSTR 3B was also being recognized, consequent to Gujarat High Court decision. Then we filed fresh writ petition saying GSTR 3 still continues to be the return. Once this was done, there was a significant problem in the sense that the government realized that it may lose the cases. So on 1/1/2021, they completely recast the rules. Rule 61 said, from now it says, only GSTR 3B is a return. GSTR 3 pati pechele. So prior to 1/1/2021, if GSTR 3B is not a return, what stops you from taking the credit? Even now you can take the credit. So in my view, humble view, if your clients have missed out any credit, please take those credits. Don't leave them. Tomorrow case will come. You have enough remedies. Appeal remedies there. First appeal, tribunal set up. If the tribunal is set up, you will have a second appeal. And let me tell you, in the future, just like your income tax appellate tribunal, your GST appellate tribunal will be a major source of practice for chartered accountants, because they will be handling all their clients' GST returns. Because once the GST returns format came, the tax practitioners who used to practice earlier, their role diminished and their entire practice went off to the chartered accountants. So therefore, you will have a lot of GST tribunal practice coming in the next 1 or 2 years. And it will be better for you to get geared to this litigation, which is going to happen up to tribunal. Let me, by experience, tell you, 80% of the litigation takes place at the tribunal level. Only 20% goes to the high courts and therefore to the Supreme Courts. 80% is done in the tribunal level itself. And places like Trichy will not have tribunal, but may have in the future. Immediately you cannot see it. But you will have commissioner appeals at least. The first appeal will be there. At least 10 to, if you have a good commissioner appeals will be allowed, but only 1 in 20 such commissioner appeals will be good. 19 will be bad. By experience, I am telling you. Therefore, second appeal is almost a must. You have to go in second appeal. When you go in second appeal, GST tribunal, when it is set up, is going to be a good place for you to practice, because the practitioners I am seeing, when in Sestat was set up for excise and customs, we used to have very less chartered accountants practicing that. Hardly, you can see about 4 or 5 of us used to practice. But the GST law is not like that. It is most of the chartered accountants are already there. So I would urge all the chartered accountants in Trichy to look at practicing the law, not the practice of GST. Law of GST practice pannungo, practice of GST practice pannadhi. Because what happens is, If you want your professional image to be enhanced, please make sure that you enhance it and don't wait for the government to enhance it for you. No government is going to do anything for you. You have to do it yourself. If you expect government to do audit, government will do this one, that one, they will give you audit, but they will insult you and give you. Do you require it? Think about it. As a professional, you have passed a very tough course actually. Let me tell you, most of the revenue officials who are there will not dare to do the chartered accountancy exam. So please keep that in mind. Now we will come to section 17. Blocked credits. There are several issues in this blocked credits, which I would like to say. Let me go one by one issues. One by one issues. First issue. What is the provision relating to block credits as far as commercial complexes are concerned? Real estate business is a vexed business. Now, let me give you an example. Let us assume that Mr. Arun is building a commercial complex. Now, if he sells the commercial complex before completion, he can take credit. No problem. No issues. What happens if he wants to keep the commercial complex for himself and rent it out? He doesn't want to sell it to anyone. He builds a commercial complex and he rents it out. Let us say I am his builder. I build this commercial complex and give him a works contract invoice. The law says if you capitalize, you cannot take credit. If you capitalize, you cannot take credit. That's what the law says in 17.5c and 17.5d. So if Mr. Arun wants to rent out, the law in GST law says, sorry, Mr. Arun, since you capitalized it in your books of accounts and you're using it for rental purposes, you cannot take credit. But if you were to sell it before completion, then we will allow you the credit. This is a very funny proposition in law. And this was challenged before the Orissa High Court in Safari Retreats case. I had also challenged this matter in Karnataka High Court with Bagmane developers. What the Orissa High Court said is this. In the first case also, Mr. Arun is paying GST on the building during before completion. The second case, after completion, on rent, he is paying GST. So why are you denying him the credit? This matter is pending before the Supreme Court. But please understand, the law as it laid down by the Orissa High Court today is that the credit is available. So you may have several real estate developers who are actually holding on to the inventory and renting it out, even after completion. And if you have not taken credit in respect of the works contract bills and other inputs, now is the time for you to take the credit based on the Orissa High Court decision. If you have missed it, please take the credit. If you miss it now, you will never get it again. Now, the question you may ask, sir, I will take the credit. Okay, all you're telling is very good. I credited. But tomorrow, if we lose the case, what happens? What happens? Supreme Court reverses. What will happen? You avail the credit. If you don't utilize it, interest or other. And because today there is a Orissa High Court decision, penalty cannot come because you're taking the credit correctly. Please understand. Third question you'll ask, how is the Orissa High Court decision binding on Commissioner in Trichy? This is the next question you will ask. Madras High Court pass panninda, I can take the credit. Orissa High Court pass panna, na eppadi sir credit edukka mudiyum? Next question you may ask. Please understand, a decision of the High Court in writ proceedings on a legislation which is an all India legislation like the GST will bind all authorities across the country till such time they have a contrary decision of the jurisdictional High Court. In other words, if the Madras High Court has not taken a view on this, any other High Court's view will prevail. So the Trichy Commissionerate, there is a decision of the Bombay High Court. You please see this. Godavari Devi Saraf's case, 113 ITR. And the observations of the Supreme Court in Kusumingat's case, where they say any other High Court's decision will be binding if you don't have a contrary view of the jurisdictional High Court. So in all these cases where you have favorable decisions of the courts, take the credit. You can tell your assessee not to utilize if he wants to save on interest. Penalty will never come because there's a High Court decision in your favor. So there's no question of penalizing. And let me also tell you another interesting thing which will be very useful for you. Slightly controversial, but very useful for you. As the law stands today, there is absolutely no interest on input tax credit availments. I request the members in Trichy to take section 50 of the CGST Act and look into it. Input tax credit interest will come only when there is a mismatch in credits. If you have availed wrongly, let us say you have availed on some bill, department says you cannot avail it, and they fight out the case. Assuming you lose the case, there is no provision for charging interest in such cases under section 50 of the CGST Act or the SGST Act, as the case may be. 50(3) only talks of mismatch in credits. That is, you take credit, he has not uploaded, and those kind of cases. 50(3) doesn't talk of interest and input tax credit at all. If you have availed, let us say you have availed on some invoice and department disputes it, there is no interest charge in such cases. Therefore, in these cases of what I was telling you, our safari retreats, commercial complex, neither interest nor penalty will be is impossible as the law stands today. Which means the maximum is you lose the credit. That's all. So the best thing for people in your areas to do will be to avail the credit and wait for the Supreme Court judgment. You need not utilize it. Even if you utilize interest in lend, but if you don't utilize, it is even safer. So this is as far as one of the block credits is concerned. Second type, let us assume promotional. This is another vexed question which comes everywhere. Today there is pandemic, sales is dull. And of course, Tamil Nadu is not short on sales, I think. Adi Thiruvira, Avani Thiruvira, all will come. Deepavali, Dasara, all of this will come. Now, let us assume a case. You have an assessee. You have an assessee who says, if you buy TV during this period, each one will get gold coin. Such cases are there, Mr. Arun, in Trichy. There will be there. Gold coin.
It may be there.
Or some other thing they will give, not gold coin, silver coin. There could be such cases. So now question is this, 17.5H, will this bar him from taking credit on the silver coin, or what he distributes free, as they say, incentives to customers? Department is of the view, such things you cannot take credit. Why do they say that? I will read out 17.5H for you. Goods lost, stolen, destroyed, written off, or disposed of by way of gift or free samples. So what department says, when you buy TV and he gifts you something, so he may give you voucher, 500 rupee voucher, or he may give you a silver coin. It's a gift. So input tax credit cannot be taken. My view, it is not a gift. Anything which is given free of cost need not be a gift. First of all, you should remember this. It is given as a sales promotion. I am willing to take that cost, absorb that cost, because I want my sales to happen. Please understand. Sales nobody is coming out from their houses because of this corona. How do I sell TV to him? And I have a second problem. Successive governments in Tamil Nadu keep on giving free things. Why will he buy? If the government comes and gives me free mixie, free TV, free laptop, free computer, free this one, free that one, why I will go and buy a TV? So you have to lure the customers to come and buy. How do you get them to your shop? Free gold coin, free silver coin. But it is not so. As far as the business is concerned, it is a sales promotion expenditure. And therefore, even though it is given without any price being charged for it, credit can be taken. Input tax credit can be taken. Because it's a sale promotion expenditure. Otherwise, my TV itself may not sell. I'm trying to promote the sales. So it is not a gift. It is not a free sample, because free sample means I should give him free sample of the TV. Only then it is input tax credit will be blocked. So it's neither gift nor free sample. You will shortly find some decisions coming on this. Because in block credits, one other issue came up before the Madras High Court in ARS Steel's case. What was it? Typically, when I buy iron and steel, let us say, for example, I buy iron and steel. I process the iron and steel and make some castings and sell it. There will be wastage. Input wastage is normal in all these cases. So department said, no, this input is lost, stolen, lost or written off. So you should reverse the credit. Madras High Court said, no, my dear. It is neither lost, destroyed, or written off. It is consumed in the process of manufacture. In that you have wastage. In that you have wastage. It is not lost or stolen or written off. It is consumed in the process. Because it is consumed in the process, credit should be given for the entire amount of raw materials. So this is a very good decision of the Madras High Court. Of course, they have followed the earlier decisions in input tax credit, Senvat credit. If you look at several decisions of the courts, they've always said wastage during the course of manufacture is not covered by blocked credits. You can take the credit. There's no question of blocking the credit. That is very important. Another issue which comes up is this. I am putting a plant and machinery in my, installing plant and machinery in my factory. Now this plant and machinery, can I take credit? Yes, no problem, you can take credit. Now, plant and machinery, I put some foundation and structures. I put a foundation so that the plant can be held. Otherwise, the plant will be wobbling. Machinery will be wobbling. So I put a foundation, I construct a foundation with cement and steel, and then I install the machinery. Question is whether I can take credit on the cement and steel which I use to make that foundation. If you look at explanation to section 17, you can take the credit for that also. No problem. Credit is available. Now, can I take credit on building? Can I take credit on buildings? Is the question. If you look at section 17, it says plant and machinery does not include land, building, or other civil structures. Land, building, or any other civil structure. So prima facie, it looks as building, you cannot take credit. Even after in 2000, up to 2004, in income tax, you had a lot of cases on this. Whether you can take credit on building as a plant. 2004, they plugged this by saying that buildings are excluded from the definition of plant. But if the building itself is a plant, what do you do? For example, when you construct certain, let us say, when you construct a commercial building, and in that building you want to rent it out to a bank, the safe vault room has to be built specially for the banks. The safe vault rooms for the banks have to be built specially. The locker rooms have to be built specially. In such cases, you will put in a lot of steel and cement into that those rooms, and you will get in. You would specially build those vaults and other things. In such cases, can you take credit on this that they are plant and they are not building? Is the question. There are no case laws in GST on this. So therefore, if you take the credit on this as plant, you are likely to face litigation. Surely you will face litigation. Face it, I'm saying. The law will settle whether you can take, whether building itself can be considered as plant. There are several decisions in income tax. Earlier to 2004, when they amended these definitions, Anand Theatres was there. Venkatra was there. 243 ITR, 244 ITR, you will find two conflicting decisions. Supreme Court. Then in 337 or 339 ITR, you will find one decision, Victory Aqua Minerals case, Supreme Court, where they said, for shrimp manufacturing, the pond that is built is a plant, not a building. Victory Aqua Mineral. So in GST, that law has to be settled, whether you can call it a plant or whether you can call it a building. It's a very interesting thing that will happen. Then we come to the operations of certain rules, because they're causing a lot of issues to us. Now, if you look at this rule 36.4, This has been causing some amount of problems to assessees. What these rules, you look at it. Section 16(2)AA, which is sought to be introduced in this budget 2021, is already substantially covered in 43A and now in section Rule 36. Rule 36 has an elaborate formula. If you take it out and see, it will tell you if you don't have the invoices, you can take credit only up to so much. You will not get credit up to so much. Now, we have challenged this Rule 36 in the High Court and it is kept for final hearing. It has been admitted. Because if I have an invoice, I should take the credit. How can a rule restrict me? How can the rule restrict me? He has not uploaded, he has not paid tax. You can't restrict me. The moment I get an invoice, 100% credit is available. The department tells you or issues notice saying, no, we are sorry, he has not uploaded the invoice. You can immediately tell, we are sorry, we have paid the tax to the supplier. So Rule 36(4) is an artificial rule purposely done so that the credit is restricted and used rampantly during January to February, March, when the revenues of the government are down. Immediately notice will come. Now what happens? Let me tell you. Notice will come to you. Now you would reply to the department saying, no, you cannot restrict me because Rule 36 is invalid. What they will do, they will block your credit. Credit ledger block pannidum. This happened. This happened to us. They blocked the credit ledger under 86A. If you look at 86A rule, only in very bad cases, credit ledger can happen. Supposing this invoice is there, goods are not supplied. Or you have got goods without invoice, these kind of cases. Where credit can be blocked. Input tax credit can be blocked. We had cases where, because somebody had not uploaded, these people blocked the credit and said, sorry. And it is the month of February, and how is this man going to use his credit? It's huge. This is not 5 lakhs, 10 lakhs amount. It runs into tens of crores. So immediately we have to move the High Court. And this is where chartered accountants have to play a role. They should not say, High Court la nammalal panna mudiyadpa. You have to look at value addition for a client. You have to move the High Court. You should be actively involved, I'm saying, because factually, this chartered accountant is the one who knows the facts much better than anyone, including client or advocate, anybody. This is a chartered accountant who knows the facts better. So immediately we moved the High Court, and then the High Court asked, under which rule are you blocking the credit? Departmental representative said confidently 86A. Then I made a submission, 86A, which class? They were not able to tell. They don't know which class. We will take instructions. I told him by the time he takes instructions and comes, my due date will come. I will not be able to utilize the credit. I will lose my, I have to pay by cash. I don't have cash. What do I do? So they said, okay, take instructions immediately. Immediately, department person said, sir, we blocked the credit. 86A, we used to block the credit, but none of those clauses apply. High Court immediately stayed the blocking and said, unblock. Immediately unblock. And next day, lockdown was announced by the Prime Minister. If we had not got that done on that day, we would have lost crores of cash for the assessing. So please see, especially in areas like Trichy, when they send you notice or they block the credit, this blocking credit, there is a problem. There's one problem. You will not know that the credit is blocked. That fellow will block it in his system. You will not know. You will be trying to utilize the credit, and as you keep clicking the system, it will not be opening. So for that reason, the rampant use of 36(4) and 86(a) has been going around in the country. One good thing that happened, however, was that during the pandemic, even the departmental officials were not attending the office. That helped all the assessees because they could not block the credits. Anyway, and even activity illa. Activity nandana credit edukirudhu paavam. Even activity illa, avanukku activity illa. So therefore, please make sure that if the department has blocked your credit, write to them and ask them why. Reply varadu. He will call you, tell the chartered accountant, why you are asking, why you are writing letters? What is this? You don't trust the department? There you should politely tell him, sorry sir, credit block until I am not able to use. So please tell me under which class. Classes. In such cases, you have no other recourse but to go to the High Court. And this is going to happen between January and March every year. You take it from me, January to March every year this will happen. Come budget day, it goes, next day let the credit la release. Allah release. The state government, central government, these buggers are trained for this. Sorry to be saying it, but this is the truth. We have faced so many cases in the past. Then we come to another very famous thing, fake invoicing and input tax credit. Very famous, happening across the country. Suddenly, I find many chartered accountants forwarding WhatsApp message. CA arrested in fake invoicing. Why are you forwarding? I can't understand this. There are so many CA, some 5-10 rascals do this. Is it therefore is it something to be forwarded? And I find also many CAs threatening the other CAs. Hey, you are filing returns. You are also abetting. No. Please understand, abetting means taking part in the crime. Filing returns is not taking part in any crime. If anybody threatens you that CAs will be arrested for this and that, it is wrong. When CAs are arrested, there will be something. The Punjab and Haryana High Court decision, Akhil Krishna Maggu's case. Please see it. They say as a rule, CAs and lawyers should not be arrested simply, unless you can prove that he was part of the conspiracy. He was also doing commission. Yes, then yes, correct. Otherwise, CAs and lawyers are not to be touched by any of the department. Next is, what happens if arrest takes place? Are these cases there in Trichy, sir? Do you find these cases? That if this is not there, I will not discuss. I don't want to waste the time of professionals if these arrest provisions are not there in Trichy. If you have not come across all these things, then let us not waste time. Mr. Arun, can you please tell me? Okay. So therefore, I will not get into that discussion at all. But just to tell you that GST law says the arrest provisions can happen if evasion is 5 crores or more. That is more than 5 crores. And maximum, of course, maximum period of as far as non-bailable is concerned is only 5 years. That is the imprisonment. Maximum is 5 years. So Supreme Court has laid down certain guidelines for safety for even dowry harassment cases. 41A of the CRPC, Supreme Court has laid down several guidelines that they say, don't arrest if the person is cooperating. If the person is cooperating, don't arrest. Unless the magnitude of the offense is huge. Nowadays, this after this 2G scam, figures are all very high. After this 2G, figures are very high nowadays. People talk 700 crores, 500 crores, 400 crores, 1000 crores for GST evictions. These kind of figures make even the magistrates hesitate to give bail. Fake invoicing is one thing which I can tell you should be put down, because every time you do fake invoicing, some other honest taxpayer is paying tax for it. Please understand this. Somebody does fake invoicing, that tax is being collected from you indirectly. Because whatever there's a deficit in tax, who pays for it? You will pay as income tax. Or some honest man will pay in the GST. Extra GST will be levied. But fake invoicing per se, let me also tell you that since the maximum imprisonment is only 5 years, there are adequate safeguards in the CRPC. Several high courts, of course, there are conflicting views. If the amounts are huge, then these high courts feel that giving bail may be not good, because the person can tamper records, tamper with evidence. He can go and threaten those who have given statements against him, especially if he is a powerful man. Such people, for them to give bail will mean that it will be difficult. They will tamper with the evidence, destroy the computers, for example. Suddenly you will find news item coming. Fire in building. Especially the government buildings, you will find this happening. Fire in building, Before somebody books corruption cases against the earlier regime, this fellow will itself destroy all the files. Same way, you will find this fire suddenly happening. Records getting destroyed. So if a powerful fellow is involved, he will destroy the records. Evidence will be destroyed. If evidence is destroyed, then you can't book the case. So this is one other aspect which is important. Now, practically, if you look at input tax credit, how will you do practically? See all the invoices that are coming into your assessing. Look at them. Once you look at all the invoices that are coming into the assessee, you will know on which credit is available. Take the entire credit. Please don't leave anything. Take the credit fully. 100% you take the credit. Then, if your assessee is having some exempted turnover, some taxable turnover, then you apply that ratio. After that, take 100% credit. Block credits you take out. 100 rupees credit, the block credit is 10 rupees. First you take 100 rupees credit, then reverse that 10 rupees block credit. Balance you have 90 rupees. Then you see how much is exempted turnover, how much is taxable turnover. Accordingly, you reverse that much. This is how you should practically apply 42 and 43 rules. Once you do that, you know how much credit is available for him. That will be available for set off against his output tax payable. Set it off. Order of set off is also given in all the in the act and the rules. IGST, then CGST, then your SGST, all those orders are there. So you have to follow those rules also. Make sure not a single credit is left out. That's why I'm saying 100% credit you first take. If you tell your assessee block credits don't take, he will block everything because he will not know what is block credit. If you tell the assessee you apply your mind and take credits only on what is eligible, that fellow will not understand. He will check with the department. I have seen this happening. Assessees will phone up the department. Sir, idle credit ekama. That fellow will surely say, no. So immediately he will, so the assessee will say, oh my God, my CA does not know anything. That fellow, this bugger, he will not take credit. So tell your assessees, take credit on everything, 100%. Then block credit, if you see the formula under rule 42 and 43, it says you take credit, then you reverse the block credits. Then you reverse exempted turnover in reverse month on month. If you do this way, you will have control over your credit ledger, how much credit is coming. When you look at credit ledger, you will know, okay, this is my assessee's, the 100 rupees is entitled credit, adlavaddu 10 block, 10 rupee, 10 rupees is blocked. 90, let us say, is exempt turnover is 30%. So 30% of 90 will go, balance I can take credit. This is how you should work in GST when it comes to block credits and exempted turnover credits. Take the credit 100% first. Now, assessee may ask you, sir, I have a doubt. Idle credit eduklama vandama. When you are sure, I always tell this across the country, when you are sure, take the credit. When you are in doubt, take the credit. First, take the credit. Then you apply your mind and see. If you are at the end of the month, ask your assessee to check with the chartered accountant. If he looks at the law and says, yes, credit is available, credit is available. Illa na illa. If you leave it to the assessee, he will not at all take the credit on several items on which credit is available. And if he loses that credit, your bottom line goes, your profit goes. I have always found this one problem happening in most of the Mofussil areas. The assessees assume that credit is not available on several things. Sir, isn't credited in here, sir? Department solta. I also find some, not all, some chartered accountants thinking that first let me check with department, then we'll take credit. Apo ni CA, avan CA. Who has studied the law better? Let me tell you this piece of information. The state government employees are not fully conversant with GST input tax credit mechanism. The central government employees are not familiar with the assessment provisions under the state law. So both of them tend to make several errors because they don't know. They have not been trained or taught. Input tax credit is one area where I find the state government offices still referring to the VAT Act of TN, Tamil Nadu VAT Act. That is not any more relevant. This is not at all relevant. Similarly, they will issue assessment notice, the local officer, when they should be doing adjudication under 73. Assessment notice. So these kind of problems are very much more in outside of the cities. An input tax credit is one area where you can lose a lot of money if you do not take the credit. So therefore, I would advise all of you that ask your assessees to take credit on everything, and then at the month end scrutinize and reverse according to the law. Block credits, exempted turnover credits. Don't miss out the credits in the first instance. There are several other provisions which are not, which may not be relevant to the Trichy crowd. So I would ask Mr. Arun Mahesh, is there anything else you want me to ask, or should I address it through question and answers for you?
Probably I thought of, okay, just a couple of things like at some point of time during the course of the presentation, you in fact touched upon the normal loss, but how about the treat any case of an abnormal loss due to fire or theft? How the input tax credit has to be dealt
Yes.
with? Point
yes.
number one.
Point number one. Well, I'll answer it now.
Yeah.
நீங்க 4 points சொன்னீங்கன்னா first point என்னன்னு மறந்துடுங்க.
சரி.
So see, if you look at 17.5H, it says goods. Goods na inputs, not a final goods. Inputs, because it's input tax credit restriction, not a final goods. Goods lost na enna? காணாம போயிடுது. Okay, it could have been lost for several reasons.
It's not in hand.
Transportation la varthe poidudu. Stolen, destroyed, written off. Now, all this will have to be read. There is a rule in law. Nociter socius, abdinu legal terminology. You will know that very well. Goods that are grouped together will have similar meanings. Lost, stolen, destroyed, written off. What is common in this four? Can you tell me? They are not put to use. It is called usage test. Supreme Court in Rajasthan State Chemicals, 255th volume of ELT. They said this. Usage test is very important for input tax credit. So in all these cases, the common thread, lost, stolen, destroyed, written off, is you have not put it to use. It never entered the stream. Only in these cases, in my opinion, can there be denial of credit. But let us say you have issued the raw materials to production and fire on the credit is available because you have used the raw material. Let us say a raw material stock.
Wait for one minute.
Raw material stock burn. When you not at all put it to use, destroyed lower. In this case also, if the tax is paid, in my humble view, you can fight the case to strike down 17.5H, because if you paid the tax, they should not deny you the credit. Yes, sir. Next question.
Actually, one of the participants has asked a question.
Yes.
Naresha, can you unmute yourself? And then,
unmute pani kekku. Yaar solunga.
Good evening, sir.
Good evening, sir. Per solunga.
Naresh Kumar, sir.
Naresh Kumar. Yes, sir.
Yeah. See, I have a client who's a hotelier.
Who is a hotelier?
Who's a hotelier. He's expanding his facility due to.
5% la irukane po. Is he taking 5%?
He is in a room. He's also renting out rooms. He has banquet hall facilities. He's a 4-star hotel.
Okay.
So my this thing is, can I claim ITC on the expansion for the sake of building?
Building, you can claim it if your assessee is willing to fight his case. If he is willing to fight a case, claim.
It's not the question of assessee fighting, sir. It's the question of only me fighting. I am ready to fight. Only thing is whether I shall I take it, shall I take ITC or not, and fight and.
அல்ல அதுதான் நான் சொல்றேன். உங்க தலையில நீங்க ஏன் இதை எடுத்துக்கிற?
Because see, he is asking me for an opinion, so.
So it's only an opinion. So please make it very clear. And நாளைக்கு he will come as a ton of bricks on your head.
Come on.
See, a hotel, is it a plant? Then you can take credit.
Oh, but
Now,
for a hotelier, is it not a plant?
Huh?
Technically, for a hotelier, is it not?
Yes. The entire hotel is constructed in such a way that it is nothing but a plant. But the exclusion of the buildings from plant and machinery under explanation is a matter of controversy, which will go up to the Supreme Court. It will go up to the Supreme Court, these matters. So if your client is willing to take that risk, well and good. As the law stands today, I have explained, interest and penalty were the doubt. Penalty were the doubt, interest were the completely doubtful, because section 50 doesn't seem to have a provision for interest. So credit, it's only the credit which will have to be reversed. So if that risk is willing to take, well and good, fight it out. Take the credit and fight it out.
Okay. So in this case, what that is in crux, you are saying that whomsoever has anything which is even though it's a building, whichever that is, say, attached to earth or something,
Yes.
which is not movable.
Yes.
If that is a plant and machinery for that guy,
Yes.
we can take credit.
He must be able to.
He must be
it is not a general building. For him, it's a plant.
Okay.
That way.
Exactly where we were also discussing. This is where I am also saying it is worth the fight.
It's worth the fight.
It is worth 7 crores or 8 crores of
it is. If it is so much, it is worth the fight. Please do it. Lend your name to a famous case. Argue it.
No, sir, but there was already a high court case in this where the assessee won, but அதே ஏதோ Supreme Court போயிருக்காங்க department.
எல்லாத்துக்கும் போயிருக்கா Supreme Court. சஃபாரி ரிட்ரீட் தான் சொல்றேன். எல்லாத்துக்கும் நத்திங், ஒரு பைசா கூட விடுறது இல்ல. எல்லாத்துக்கும் போயிடுவாங்க. They will go for everything. Simple matters, are going to the Supreme Court, my dear.
But in that case, what about claiming ITC on insurance for that building?
See, you are saying it's a plant. So you are saying the insurance related to the available item should also be taken credit. Yeah. So fight so there's nothing. Let me openly tell you, there's nothing without a fight. Input tax credit, thus far it has come because people were like you are fighting. Income tax, how did it get settled, sir? Tell me. உங்க பையனும் CA பண்ண போறானா? See, income tax got settled because chartered accountants took matters to the court and it got it settled. Are they getting it settled now and then? Adhe marthan GST law also will get settled only through litigation. You cannot avoid litigation. I'm telling you. I don't agree to all those people who tell you, no, don't go for litigation. It's not going to solve any problem. 7 crore, 8 crore credit, how will you sort it out unless you go for litigation? Will you tell your client, don't take credit? So please take it carefully, but educate him. This is the plus and this is the minus. Clean actually. Yes, sir.
Is there another question, Naresh? Whether
yes, sir. Likewise, there is another issue generally for a contractor who undertakes civil contracts and other highway contracts. There is huge distinct insurance coming for him for all his JCBs, tankers, for all his vehicles, and also for other plant and machinery. But unfortunately, equipment we only capitalize it under vehicles.
Okay.
So is there any precautionary measure to be taken?
No, you see, it's like this. If you look at what is barred for credit? It's only motor vehicles which are used for transportation of persons.
Yeah.
Up to 13%. Now you take any of your things, they are not typically motor vehicles for transportation of persons.
They are not.
They are not. So please keep this in mind. So credit can be taken in those cases. If that is so, the insurance on those vehicles also can be taken credit.
Fair enough.
Okay. So in fact, in this scenario, I just want to understand another thing also. Say the same lines. Say suppose I am a person. I'm not at all. Suppose I'm doing a banking business.
Yes.
And I'm having a centralized AC air conditioner which I have installed. So
Yes.
so I would have categorized this one under plant and machinery for my financial statement purpose.
Yes.
So in that case, can I be allowed an input tax credit on that? Say stating that this is not in line with your business or something which they can.
You have to take shelter under that the safari retreats case.
Okay.
Adhe case eduthu neenga credit eduthu, and obviously they will come for with the show cause notice, and you have to again reply and fight it out. There is no doubt.
See, the question is pertinent because of the materiality involved. That's the problem.
Absolutely. See, the materiality involved in most of this, if you cumulate and see, I've seen that already with assessees. Any individual issue you take, it may be say 1 lakh, 2 lakhs, 3 lakhs, but over 30 invoices, it will be 30 lakhs.
No, sir. See, the problem is, as Arun was also pointing out, see, even if it is renting of commercial property, the thing is, on an average, it works out to 60,000-70,000 square feet.
Absolutely. It's a huge amount.
It is his building, but the thing is, he is also charging for services that he is giving other than that. So, this ANC of lift maintenance. So, Arshad, 30-40 lakhs.
Yeah, why you should not take the credit?
Don't take ITC, he gets.
Then see what he thinks. There's no logic in this, what this bugger is telling. I agree with him. He's a businessman. He's paying tax on his output. If you tell him, no, capitalize panna, he'll tell you why you asked you to capitalize it. Unfortunate, but this is true. You have to, this law, you have to fight it out. Otherwise, there is no logic in this law. Because if you look at it, I don't know why they're blocking these credits. Are these people not paying their output tax? They are paying. What is wrong in giving them? Credit utilize. That is his fright. He doesn't see, they don't realize that you will have to give these credits because a typical value added tax system, if you block the credit at one end, it will lead to evasion at the other end. What that fellow will do? 40 room occupancy, 20 room occupancy. So you are finally losing out on the revenue if you do this. Yes, sir.
So, Mr. Ashwin Kumar, can you unmute and ask your question, or should I?
Yes, sir.
Yeah, okay, thank you.
Yeah, sir. Good evening, sir. I'm Ashwin Kumar.
Yes,
so first of all, thoroughly enjoyed your lectures. It was mind-boggling, and you opened, many Pandora box. You opened many areas, contentious matters there. Yes, sir.
See, you have thus far, you people have heard only the same old things being said. Department enna solrano credited, department illen sonna edukada, idella ketu romba arachamaava arachachu, romba naala arachita. So it is time you heard something different so that you will be able to apply your mind. You are a chartered accountant. You apply your mind. Don't take what I say sacrosanct. You apply your mind and take.
Exactly, sir. Perfect. Yes, sir.
What is the question?
Sir, I have a concern or a doubt, sir, practical doubt. Whether, for example, let's take an example, sir. There is an purchase from an unregistered dealer,
Okay, there is no tax on it, sir, as of now. They are not.
Yes, sir. Yes, sir. They have notified cement purchase, sir. So this is a practical scenario. Let's say I'm purchasing cement from an unregistered dealer,
Okay.
and I have paid the tax on RCM under reverse charge.
Right. Are you paying tax on your output?
Yes, sir.
Then you take credit.
The problem is the time limit under 16 subsection 4 is time barred, sir.
Why?
So because the first of all, this has been observed as a lapse by the during the departmental audit. The lapse has been observed. They asked us to pay the tax on RCM, sir. Say let's say it is for the assessment year 18-19, sir.
No.
Sorry,
when did you pay?
Financial year. So we paid 2021, sir.
Take the credit.
Sir,
because RCM credit, please come to rule 36. What does it say? The rules. Do you have it with you?
Yes, sir.
Rule 36 கொஞ்சம் படிக்க முடியுமா உங்களுக்கு?
Definitely, sir.
சொல்லுங்க.
Yes, sir. 1 minute, sir.
Music is good, but unfortunately, it's in the middle of a session. Rule 36 says subject to payment of within சொல்லுவோம் பாருங்க. See the rules 31.3, 31.3F இதெல்லாம் போடும். See in an RCM payment you raise a self invoice.
36.1B, sir. Yes, sir.
Yes. So what does it say?
Invoice issued in accordance with provisions of 31.3F subject to payment of tax.
Subject to payment of tax. So you paid the tax only in 2021. Take the credit.
Yes, sir. Okay, sir. So 16 subsection 4 time limit is not
applicable now. இது இருக்கு என்ன டைம் செப்டம்பர் வரைக்கும். கிரெடிட் எடுத்துக்கோ அப்புறம் பாத்துக்கலாம்.
சரி sir. Okay, sir. Okay. சரி sir. Thank you, sir. Thank you. Sir, one more doubt, sir. May I ask?
Yes.
Sir,
go ahead.
Whether
I have left 40 minutes so that you people will ask questions. Deliberately I have done it.
Thank you, sir. Thank you.
I can go on with all complicated issues which are of no relevance to your place. So you please ask me questions.
Yes, sir. It's a very generic doubt, but it's a long pending doubt, sir. Whether the term taxable supply subsumes within its expression the exempt supply, sir, because I find, to my very limited understanding, there are views that are present, sir. Whether the taxable supply is different, exempt supply is different, non-taxable supply is different. View 1. View 2 is taxable supply subsumes only the exempt supply which are wholly exempt under section 11. That is 2 clause 47. If you look into exempt supply, the supplies which are wholly exempt under section nil rated supplies, these two is subsumed within the expression taxable supply, or all three are different. The taxable supply is wide enough to cover even the non-taxable supply because of the deeming fiction that is there in the 2 clause 47, sir. So, which is the accurate legal position?
Legal position actually 2(108) இல்லையாது taxable supply.
Yes, sir. 2(108).
108 taxable supply will say, I think, supply of goods or services which are leviable to tax.
Exactly.
So levy and liability are two different things in law.
Okay, sir.
Leviable means anything which is a subject matter of tax.
Okay, sir.
It could be liable to tax, it may not be liable to tax.
Okay.
You follow?
Okay, sir. Yes, sir.
It is leviable to tax, it's a subject matter of the tax. So tomorrow you may say, I'm exempting it from tax. Okay, but it is still leviable to tax. Only those which are leviable can be exempt. See the decisions of the Supreme Court in Wazir Sultan case 83 volume of ELT, and you will find one more decision, Wallace Floor Mills 44 volume of ELT. The rendo contrasting decisions.
Okay, sir.
In the context of simple excise. So leviable means anything which is the subject matter of tax. So taxable supply, so now everything which is a subject matter of tax is covered, including exempt.
Okay, sir.
Including exempt. But they have put the exempt supply separate definition.
Yes, sir.
What they say is, in an exempt supply, it should be wholly exempt. So partial exemption is a taxable supply. Please understand this.
Okay, sir.
If you are partially exempt, that is 18% rate, 5% reduced panirkana, it is not an exempt supply.
Perfect. Okay, sir.
It becomes a
taxable
supply because it's taxable. Or ruba rate taxable. Exempt supply is defined as one which is wholly exempt from tax or attracts nil rate of tax.
Okay, sir.
So this is the difference. Ideally speaking, legally speaking, taxable supply includes exempt supplies.
Perfect.
But
Thank you, sir.
If you see, please carefully see exempt supply definition. It also says
It
it includes non-taxable supply.
Yes, sir.
Tapu bantam.
Yes, sir.
Because if taxable supplies includes exempt supply, and exempt supply includes non-taxable supply, then taxable supply includes non-taxable supply. So it's a blunder in the law.
Yes, sir.
Follow? It's a blunder in the law.
Blunder. Perfect.
Yes, Vishuvoda dialogue mari
yes, sir.
It's a blunder in the law. This was actually the exempt supply definition is relevant only for reversal of input tax credit under section 70. By doing this, he has made these three. Let me tell you openly, taxable supply cannot include non-taxable supply.
Yes, sir.
Taxable supply will include exempt supply. It will not include non-taxable supply because non-taxable means there is no levy.
Perfect.
Take
yes,
securities, for example. There is no levy, non-taxable, because he says it is neither supply of goods nor supply of services.
Okay, sir. Thank you. Thank you, sir. Thank you.
Any other queries?
Sir, one more this thing, sir. Sir, I remember the landmark cases on indirect taxes written by you, sir. So we only request you to share with us certain recent landmark cases in the area of GST in the recent times that could be useful for us in the field of ITC, in the area of ITC.
In the area of ITC, which I have, if I have seen, one I already touched upon is that the decision of the Gujarat High Court in AAP's case, where Gujarat High Court said 3B is not a return. They plugged that loophole only on 1st January 2021 by amending Rule 61. So therefore, prior to that, even though they attempted to plug it once, they didn't do it properly. So if you have all missed out credits from 2017 up to 31/12/2020, and the credits all because the return 16.4 condition will not apply. 16.4 which says you should have filed the return and the condition apply because the return was not specified till the 1/1/2021. Otherwise, return was GSTR 3 and GSTR 3 was indefinitely postponed by the GST Council. That is one good decision. Do you have any exports in Trichy? Any exports taking?
Yes,
okay.
Sir.
Then there is a controversy on inverted tax structure,
yes,
whether you can take refund or not. Now, this inverted tax structure refund, whether it is restricted to only inputs or input services also. This controversy is pending in the Supreme Court because Gujarat High Court took a favorable view in favor of the assessee, saying inverted tax, you can even claim input services. Madras High Court took a view that only inputs, no input services. Supreme Court has heard the arguments and reserved judgment. Anytime it will come. So that is also very useful, this one. Then exports, another thing. In exports, please see that your clients are not losing credit because exports, what is called zero-rated supplies, are treated as taxable supplies for the purpose of input tax credit. So to that extent, the credit you can take and utilize for your domestic clearances or claim refund. If you're having accumulation of credit because he's having only exports, then you go under a refund. Refund of unutilized input tax credit under 54 and Rule 89, and the credit you cash it out. If you don't cash it out, it will add to the costs of your assessee. That is another useful tip which I can give you. Make sure he's filing his claims monthly or quarterly as the case may be. That is another very useful tip.
But the only
Madras High Court.
claiming refund is the timings.
Timings on the monthly or quarterly as the case. See, you have 2-year time limit. So if you export today, within 2 years you can claim. But 2 வருஷம் கழிச்சு claim பண்ணனா அப்புறம் cash flow என்ன ஆகுது?
அதான் problem.
So every quarterly you keep claiming these refunds so that it keeps us in as a cycle. ஒரு சைக்கிள்ல போயிட்டே இருக்கும்.
Sir, may I, sir?
Yes, sir.
Sir, since you spoke about the Gujarat High Court decision, if I'm correct, you spoke about the VKC Footsteps India Private Limited.
Absolutely, yes, you're right.
Sir, I have a doubt here. The case law actually speaks. It speaks about only. It speaks only about input and input services.
That's what I said. Input and input services.
So I have a doubt. Exactly. Capital goods pati anga pesalaye, sir. So adanal na whether first of all I have two sets of questions here. The first question is whether I can extend the argument even for the exports, because the case law is in context of IDS. Even though it is an IDS, precisely to say the judgment, it says rule cannot override 54 subsection 3.
Yes,
89 sub rule 5 cannot over. So can
yes.
so 54 subsection 3 covers two cases of refunds, sir. One is the exports and other one is the IDS, inverted duty structure. So can I
cut your question short?
Yes, sir.
In my opinion, it covers all components,
Yes.
all input services, capital goods.
But for
department
capital,
will, yes, absolutely. Department will say capital goods கிடையாதுன்னு சொல்லுவோம்.
Yes, sir.
But in my opinion, 54(3) does not make a distinction between these three. 54(3) only says input tax. If you go to 2(62) and 2(63), it will cover all goods and services. All goods means inputs and capital goods. So, in my opinion, capital goods credit also should be included for the refund. You cannot deny them.
Thank you, sir. Thank you. But matter has to be litigated, sir, because
everything you please
yes,
understand. Everything which I say will have to be litigated.
Litigated. Okay, sir. Okay.
Please be very clear. Don't fight shy of litigation. Is what my message is.
We are happy to fight, sir.
10 ரூபாய்க்கு சண்டை போட்டா தான் 5 ரூபாய் கிடைக்கும்.
Exactly.
But if you don't fight, 10 ரூபாய் கூட கிடைக்காது.
Any member has to address any queries?
Sir, good evening, sir. This is Manraj from
Yes.
Chennai. Sir, you touched upon that area of giving free gold coins or
Yes.
in that area I missed out. What is your conclusion? Sorry.
Conclusion is you can take input tax credit.
How, sir? Can you explain? Sorry.
I have explained already. Recording இருக்கா? Recording பாருங்க.
சரி sir.
Recording பாருங்க.
Generally it is not eligible னு வருது.
அதுக்கு தான் நீ ரெக்கார்டிங் பாருங்க நல்லா கிடைக்கும்.
By Raghu sir is excellent. So I'm going to go by the logic as explained by the speaker. It's excellent.
லாஜிக் பாருங்க. நீங்க லாஜிக் பார்த்துட்டு you
That is
yourself
why we are
decide.
also converging, sir.
Yes.
But அந்த ரூல்ல வந்து ஸ்பெசிபிக்காவே கொடுத்திருக்காங்களே சார்.
என்னன்னு?
Oh, it is just pointed out. Okay,
5H.
17(5)(h), yeah.
You please listen to my lecture. It is
Okay,
clear.
okay.
Don't worry.
Go through it, sir.
அதுக்கு அப்புறமும் உங்களுக்கு புரியலன்னா எனக்கு ஒரு மெயில் அனுப்புங்க நான் சொல்றேன்.
Okay, no problems. I will go through it.
Please.
Wonderful.
Okay. It reveals any litigation. You can unmute and ask.
யார் சொல்லுங்க அது? ஓ எஸ் ஓ அரோஹரா சொல்லுங்க.
Any litigation being decided in favor of the assessee by High Court or Supreme Court, the department comes up with the amendment in the law, whether it is valid.
See, please understand, இதெல்லாம் நடக்க போறது. Nowadays they are frightened of doing retrospective amendments. They do sometimes, they don't do sometimes. You can't stop litigating because they may amend the law. So it is not a justification for you to say, what if you don't fight, you don't get anything.
No.
So you,
Whether the amendment itself can be challenged.
see, amendments which are retrospective and add a burden to the assessee which is unreasonable can be challenged. Kindly see the decision I'm not saying the legislature has the powers to do retrospective amendments, no doubt about it. But such an amendment should be reasonable. Supreme Court JK Spinning's case, 32 ELT and 99 ELT. Rendu parunga. 32 volume of ELT and 99 volume of ELT. What they say is that if the retrospective amendment leads to unjustified demands, huge demands, which are unreasonable, then you can challenge it. Please read that decision. Yaar the decision quote panna matengara. And it doesn't suit them.
Thank you.
Sir, one more question, sir.
Yes.
Sir, for example, if as per the contractual agreement, I'm allowed to make the payment, let's say due to pandemic or due to any other reason, I'm allowed to make the payment to the supplier along with the value of tax, let's say after 300 days.
Yes, sir. It is
But
not failure to
artificial-
pay. No, I know
Yes,
what your question is. It is not failure to pay. Please be clear.
Okay.
It is not failure to pay. It's in terms of the contract.
Okay.
Failure to pay means when I don't pay. Not because contractually you are going to pay it late. That is my view.
Okay, sir.
I know there are contrary views on this, but I'm very clear on this. Failure to pay, when they say, means that means as per the contract you failed.
Okay, sir.
It's not a case where the contract itself says you pay late.
Okay, sir.
Okay.
Thank you.
It's a good question because I should have covered it in my speech.
Probably it wasn't relevant one to the current.
Really relevant in Cholamata.
Very relevant in today's terms.
Highly relevant. And there are, since my speech is extempore always, there is a likelihood that I may miss out certain points. So, my questions are always welcome.
So another thing that is, it generally happens in a place like Trichy and all, like say it is not related to input tax credit, but in general as a GST. So normally there is a practice of usufructus mortgage over here.
Okay.
So whether the usufructus mortgage, if a concept gets applied, whether the GST also will come into picture, because generally usufructus mortgage, it's as if like a loan which they receive and they repay the amount after say 10 years or whatever that.
On the property rent into they will pay the usufructory mortgage, isn't it? The returns of the property will be taken as a repayment of the loan.
அதாவது இது டெக்னிக்கலா என்னன்னா சார், இங்க ரீபேமெண்ட்னே அதாவது என்னன்னா, நான் ஒரு 10 வருஷம் உனக்கு அந்த ப்ராப்பர்ட்டியை கொடுத்துட்றேன், ஐ வில் நாட் கிளைம் ரெண்ட். அதாவது நான் வந்து ரெண்ட் அதுக்கு மேல என்ன 10 லட்சம் ரூபாய் மொத்தமா நான் கொடுத்துருவேன் உங்களுக்கு, நீங்க அதுல இருந்து வட்டி வச்சு நீங்க சம்பாதிச்சுக்கணும், அது உங்களோட திறமை அப்படிங்கிற மாதிரி தான் இருக்கும் அது. ஸோ ஸ்ட்ரக்சரே இப்படிதான். இப்ப சே தி லேண்ட் ஓனர், what he will be doing, he will be giving the building to the tenant. In turn, the tenant will be giving say 20 lakhs.
Okay, lease mari
technically lease தான், அது lease தான். So
after 20
years, after 10 years வந்து he has to return that 20 lakhs அப்படியே திருப்பி கொடுத்துடணும், அவ்வளவுதான்.
Yeah. Now let me so what is your question?
So அதான் இதோட GST implications.
I told in the beginning, it's a business tax. Unless the person is doing it in the course of furtherance of business. I have 5-6 buildings or 10 buildings, each one of them, it's now my business to keep on doing this kind of work. Yes, GST will be payable. But let us say I have one building and I let it out to you on lease. In my humble view, it is not the course of furtherance of business at all. It is simply an investment proposition which I am having. Income from house property then kami pa in my income tax returns. Though that is not determinative of GST, nevertheless, in my view, I have taken this view also that if you are not doing something in the course of furtherance of business, the question of attracting GST does not arise.
Even though it is a commercial building, sir?
It's not in the course of my business. Please understand this. Commercial building and a commercial activity use, this is the course of your business. Me letting out a commercial building is nothing. It's not in the course of my business. It is just letting out of the property.
Yeah, assuming that, suppose, say there are some 3 to 4 tenants.
I think you have not understood what I'm saying. You can have 10 tenants, 100 tenants. Let us assume I have a building. I have a building, commercial building. I have constructed it. Let it out to 100 people. In what way it is in the course of furtherance of my business?
That is in my business, you mean to say the landlord's business?
Absolutely, my dear. This is exactly what I'm telling. The earlier service tax law, when it was initially introduced, said it should be used by the user in the course of business. Then they amended it. The GST law is very clear. You have to test the supply in the hands of the person who is supplying, not in the hands of the receiver. You follow? Like you do in income tax, you tax the income based on how it is received, not how it is paid. Please keep this in mind. I knew that this will be an issue in your place. In my opinion, I know that it is controversial what I am telling, but this is the truth. You want to listen to truth?
Okay.
Sir, may I, sir?
Yes, sir. Please.
Sir, since you spoke about 50 subsection 50, I have a doubt here, sir. So I understand the fact that if you avail the ITC and wrong, that is, you have wrongly availed the ITC and you have not utilized, you can reverse it without interest.
Yes.
But what if I'm availing it and utilizing it, and later I came to know I've availed a non-existent ITC? Let's say an example.
What do you mean non-existent?
Yes, sir. That is I've used this term. This is not a legal term, sir. That is what I'm trying to say through non-existent ITC. So let's say I punched in the IGST column the value, but it is CGST and SGST credit. I punched in the IGST column the return.
What difference it makes?
And I've utilized against the IGST liability, sir.
Yes. What difference it makes?
So there could be an argument where 50 subsection 1 which says failure to pay the tax, the output tax.
It's like
interest.
this. So it's like this. I'll tell you. I'll come to it. In that particular months, you must see whether you had sufficient credit balance elsewhere for those taxes.
Yes, okay,
if you had, then there is no question of loss of revenue to the government. Please understand, there is a decision of the Karnataka High Court, bill forge.
Okay, sir.
Bill forge on in input tax credit only. See, you should understand that interest is compensatory in nature.
Perfect. Okay, sir.
And therefore, if there is no loss, there cannot be an interest charge.
Okay, sir.
If I have made a genuine error, but supposing I have deliberately put it in IGST column so that I will discharge that when I had no liability or no credit in SGST, CGST, then interest or line, a failure to tax 50 bracket 1 lower.
Okay, sir.
That is different. This is different.
Okay, sir. So I have to subdivide into 2. If they have sufficient balance, then no need to pay interest.
Absolutely. That's the law.
Perfect. Okay, sir. Thank you, sir. Thank you.
Right, sir.
So,
thank you.
Okay. So, better, sir, we can probably give a vote of thanks.
Thank you, sir.
Thank you.
I thank the speaker for his enlightened speech on the ITC. Especially lot of people, not only the clients as well as the chartered accountants, having lot of worries on the ITC. You have given us a very good detailed explanation, and also be stubborn on taking the credit instead of being awarded for not taking the credit, afraid of any litigation, afraid of calls to the department. I thank you especially for the stronger words. I thank all the members also who have attended the class for the past 2 hours. Once again, and thank the speaker for his thank you all. Over to the chairman.
I think we can close. Thanks, sir. Thank you, sir. Thank you.
Thank you.
Thank you, sir.
Thank you. Thank you very much.
Thank you.
Waiting for your landmark cases on GST, sir.
People, see that book is getting released. It's already in print.
Wonderful.
It's in print, and next first week September it should be available in the market.
Great.
Thank you, sir.
Thank you. Thank you.